Here's a new stock that we're going to put on the board. This is one that we did trade before. We did rather well with it. I want everybody to be really careful with this because this is it's a cheap stock. There's a reason why it's cheap. You have to keep have to be very diligent and very careful with something like that because, you don't put, important money you can't lose in something like this because it could go, could go to zero if they have some issues. But when we look at this on the longer term, it had a value of $9, and more recently in 2010, $6. So for the price of 20 cents, it may be worthwhile to try to go take advantage of this kind of opportunity. When we look at this from a more recent action in January 2015, you could see it hit its low, but we've been seeing divergence ever since. Momentum's really been kind of shifting to the upside, and now we're seeing it get close to the 50-day moving average. So if it gets over 32 cents, I think we really see this start to try to kick back up into the 40 to 50 cents, and it could really be a pretty good mover. And if it really turns the corner on the longer term, this could be a pretty nice stock. So there's a lot of risk. Be careful. We're going to get positioned. This is going to be a longer term play. If it starts to break back down toward the 10 cents, I don't want to hear everybody saying, oh my gosh. I'm warning you now that that's a possibility. But if it does break to the upside, it could be very lucrative.